Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some of the stocks on the move today. I'm Paul Sweeney alongside Scarlett Fu. We're joined by Bloomberg's Christine Aquino. Christine, what are you looking at today?
We're going to take a look at Netflix, Paul, because, of course, it is still continued to be mired in all these news flow about the Warner Brothers deal. So Netflix shares down today. Ticker NFLX. Those shares are down more than 3% at the moment. So a few things here, right? We know that this is going to be a long road in terms of regulation. Is it even going to be approved by the Justice Department, etc.? And now President Donald Trump weighing in on this deal as well, raising potential antitrust concerns, and the president saying that the resulting market share of the two companies, quote, could be a problem. And of course, we heard from Paramount as well, saying that they're offering to buy Warner Brothers Discovery for $30 a share in cash, which is more than what Netflix was offering. So, looking at the Polymarket bets, because of course there are odds on Polymarket for this, the question of whether Netflix can close the acquisition by the end of 2026, those odds are now down to 23%. From around 60% before President Trump's comments. So a lot of road here to go. Netflix definitely facing a lot of challenges here. So we'll see how that goes.
All right. So we'll keep an eye on that one. Obviously a developing story. You're also looking at Tesla?
Yeah, looking at Tesla today, those shares also being challenged. So ticker TSLA shares down more than 2% at the moment. So the latest news is that they did get downgraded at Morgan Stanley. So Morgan Stanley analysts downgrading that share from equal weight from overweight, citing valuation concerns. Analysts saying that there are non-car factors being priced into the share price at the moment. Other news for Tesla, though, slightly more positive, is the fact that the company made its first appearance in the top 10 for reliability in Consumer Reports ranking. So this is a magazine. There's a lot of product testing, and then they come out with their annual ranking for brands. Last year, Tesla was at 17th place. So improving their standing, the magazine saying that there's an improvement in its overall build quality and what the magazine calls a, quote, standout electric car driving system.
All right, IBM.
Let's take a look at IBM. That share doing well this morning. So ticker IBM shares up 1.4%, of course, because of the news that they are going to acquire Confluent for about $9.3 billion. So Confluent, what they do essentially in the AI ecosystem is they provide a platform, right, for all of these relevant data providers to basically all gather, and then companies can access the data in real time. So that's essentially what they do. So Michelin, for instance, uses Confluent to optimize their inventories of materials. Instacart uses Confluent so that they can figure out what their inventory looks like on their website. So pretty useful stuff for IBM to be acquiring. Their biggest acquisition since Red Hat in 2019. Yep. And Bloomberg Intelligence saying that, that's going to complement their existing suite of products quite well. The multiple 9x forward 12-month value to sales. This is a reasonable premium for Confluent, according to Bloomberg Intelligence.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.